You talked about this idea of building a rolling portfolio of liquidity. Just talk about that a little bit more, because I think it's a really important concept and I want to make sure people understand what that means.
Yeah, appreciate the question very much. I think in my view there are two ways to generate liquidity. So just to recap, one is rolling portfolio. What do I mean by that? So on a platform like Yieldstreet, you have investments that have a term of as low as 3 months all the way to 10, 12 years. And so I think as a consumer, we are offering education as well as, shortly this summer, we'll offer automated tools to create customized portfolio depending upon your liquidity needs. So maybe you put some portion into investments that have like very short term, so 0 to 2 years, others in medium term 2 to 4 or 5 years, and then others in long term, which is 5 years plus. And so I think that's one way to think about liquidity. The other way is to have true liquidity. So at Yieldstreet, we launched a secondary market for some of our funds last year. And so some funds have quarterly liquidity. So every quarter you'll get an email saying, hey, if you want to redeem, let us know. And we are offering that and expanding that. We as a company are very focused on it, and I'm sure the industry is focused on it. Where my vision is that ultimately you should have the same experience as E-Trade or Robinhood, where you could be able to go into your position and say sell. So I know, Daniel, you do a ton of venture investing. Obviously you have a very large venture portfolio, but imagine like the SpaceX example. If you could take your portfolio and it would be on a platform and you could say, hey, I want to sell because I want to sell maybe 20% of my portfolio. I need some liquidity. I'm building a house, sending my kid to college. I want to buy a second apartment, whatever may be the case, want to get married. And like you hit click and you have a automated market. That would be great. And so I think for us, Yieldstreet, from a vision perspective, that's really where we are going. And we're taking slow steps. So I'll give you another example. This summer, we want to launch a secondaries fund. What does that mean? We'll reach out to our investor community on certain deals and say, hey, you have an opportunity to sell. Here is how much is the value currently of that investment. And you let us know. What we will do, aggregate all of that. So maybe I'll take, Daniel, your 25,000 from deal one and Joe's 25,000 from deal 75, aggregate thousands of investors into a fund and offer liquidity. And then what we could do is take that fund and offer that back on the platform for our investors, right? Because then you suddenly get access to 15 different investments and that have already been originated and are being offered on the platform. So that's way to do it. And then ultimately, again, as I was saying, I want to see a world where you could like do it the same way we do for stocks. Of course, there's lots of complexity and regulatory hurdles to cross there, but blockchain and DeFi, potentially can be a solution along with regulatory changes to kind of get us there. I don't see it happen in the next 12 to 24 months, but definitely in the next 3 to 4 years, 5 years, it's a really good ambition for all of us to have who are in the industry.